To become a trader. Maybe it started as a spark, a YouTube video that showed someone flipping $500 into a luxury lifestyle. Or perhaps it came from a deeper place, a desire for freedom, control, or just a better life. Whatever the reason, here you are, at the edge of the most emotionally demanding, psychologically humbling, and financially brutal journey of your life. The first 12 months, they're not just a test, they're survival. Most won't make it. Not because they're not smart, not because they don't try, but because they enter a battlefield with the wrong mindset, broken expectations, and no emotional armor. You see, this game is rigged not by the market, but by your own psychology. You are your worst enemy here. And unless you learn to think differently, feel differently, and respond differently, the market will expose every weakness, every flaw, every fantasy. I wrote this guide not to sell you a dream, but to wake you up, because trading is not about winning trades. It's about surviving your worst days, outlasting your darkest months, and building habits that allow you to live through the chaos until clarity emerges. This book isn't filled with strategies or indicators. You can find those anywhere. This is a real conversation, raw, honest, and emotional, between the version of you who's about to begin and the version of you who's still standing after 12 months. Together, we'll walk through the brutal truth of why 90% of traders fail in the first year, the psychological traps that quietly destroy consistency, how to emotionally survive big losses and come back smarter, what to do when you want to quit and when you probably should, and how to build habits that protect you from yourself. Each of the 15 chapters ahead is designed as a mental and emotional checkpoint, not just tips, but truths. Some of it will sting. That's good. It means we're cutting through the noise. Because the market doesn't care about your hopes. It doesn't care how badly you want to succeed, but it does reward those who learn to think like survivors. Those who show up day after day, disciplined, patient, and emotionally self-aware. So before we dive in, take a deep breath, let go of the idea that this will be easy, and get ready to meet a version of yourself you've never encountered before. The one who faces fear, greed, doubt, and self-sabotage, and learns to overcome them. Welcome to the first year of trading. This isn't a game. This is transformation. Let's begin. Chapter 1. The First Step. Why You Chose This Path. You probably didn't come here by accident. Maybe you stumbled into the world of trading after seeing someone post massive profits on social media. Maybe it was a YouTube rabbit hole that pulled you in. Or maybe, just maybe, you've always had this quiet, burning thought. There must be a better way to live than trading my time for money. And here you are, at the very beginning of your journey. A journey that will test everything: your patience, your discipline, your confidence, your self-worth. But let's start with the truth, the kind most beginners never hear. Trading will break you before it builds you. Not because you're weak, but because you're human. In these first 12 months, you will face uncertainty that makes your stomach turn. You will win, feel unstoppable, then lose everything in one impulsive trade. You'll study charts for hours only to watch price completely ignore your setup. You'll doubt yourself, not just as a trader, but as a person. And that's why this guide exists. Not to tell you some magic indicator, not to teach you a perfect strategy, but to help you survive your first year, emotionally, mentally, financially. Because that first year isn't about making money, it's about not giving up. Now take a moment to breathe. You're not behind. You're not too late. You're exactly where you need to be, at the start, with your hands on the wheel and a whole road ahead of you. But listen carefully. How you drive matters. Let's start with your mindset. The first myth to destroy is, "I'll get rich quick." You might think you believe in hard work, but part of you, deep down, still hopes this will be faster than a job, easier, smarter. And that's exactly what the market preys on. The moment you chase quick results, the market will hand you a lesson. A red candle, a blown-up account, a gut punch that makes you question why you started it all. So here's your first principle. Your goal in year one is to stay in the game, not to grow fast, just to not blow up. Think of it like training to run a marathon. You don't sprint the first 3 miles, do you? You pace yourself. You get the shoes, the water, the strategy, and you protect your knees. In trading, your capital is your knees. You lose them, you're out of the game. Now ask yourself, why are you really doing this? Is it freedom? Is it control over your time? Is it because you're tired of taking orders from someone who doesn't even understand you? Write it down. Seriously, grab a pen or open your notes and write your reason. Because when you're 6 months in, stuck in a drawdown, watching your confidence drain like water, you're going to need that reason like oxygen. This isn't just about charts and candlesticks. It's about resilience. It's about showing up after a losing streak and saying, "I'm still here." Now let's talk about expectations. In year one, expect these 5 things. You'll lose money. Not always, but yes, it's part of the tuition. You'll feel like quitting, especially when nothing makes sense. You'll switch strategies over and over. It's okay, but we'll fix that later. You'll blame yourself, then blame the market, then blame your tools. You'll come back stronger if you're willing to learn. That's the emotional roller coaster. It's not just real, it's required. You're not failing when you feel lost. You're failing when you pretend you don't. So what should you do today? Start observing your emotional patterns. Start logging your thoughts as much as your trades. Because the market isn't just testing your setup, it's testing you. In year one, the biggest edge you can develop isn't technical, it's psychological. Can you control your greed? Can you hold your discipline? Can you walk away when you're red? The traders who survive aren't the smartest. They're the ones who protect themselves long enough to grow. So take this seriously. Protect your mental capital. You'll need it more than anything. Before we close this first chapter, I want you to say one thing out loud, right now. Even if it feels silly, say it. I'm here not to get rich fast. I'm here to get better every single day. That's the foundation. And we're just getting started. In the next chapter, we'll talk about account size, risk exposure, and why going all in on your first few trades is the fastest way to never trade again. Ready? Chapter 2: Capital, Risk, and the Illusion of Going Big. Let's be honest. When you opened your first trading account, you probably thought, if I just had more capital, I'd win bigger. You weren't alone. Almost every beginner believes the problem is the account size, not the skills. But here's the brutal truth. If you can't manage $100, you'll burn $10,000. This isn't about money. It's about risk and your relationship to it. In your first year, your biggest threat isn't the market. It's yourself. fueled by overconfidence, desperation, and dreams of quick returns. So let's break this down together. This might save your entire career. Capital versus skill. Look, having more capital feels empowering. You can take bigger trades, capture more points, make real money, at least in theory. But capital without control is like handing a toddler the keys to a Ferrari. You're not ready, not yet. That's not an insult, that's protection. Because every dollar you lose in the first year isn't just financial, it's psychological. It eats at your confidence, it drains your energy, it pushes you to revenge trade. And that spiral, it's brutal. So here's your rule. Only trade what you can emotionally afford to lose. Not just financially, emotionally. Ask yourself, will losing this trade ruin my day? Will I start doubling down to recover? Will I be able to sleep tonight? If the answer's yes to any of those, you're trading too big. The myth of all in. Ah, yes, the classic movie moment. The underdog pushes their entire bankroll in. One big trade, one glorious win. Cue dramatic music. But this isn't Hollywood. This is real money, your money. And the market? It doesn't care about your dreams. It only rewards discipline. Going all in doesn't make you bold. It makes you reckless. Let's get practical. Say you have $1,000 in your trading account. How much should you risk per trade? Here's a simple guideline. Risk 1 to 2% per trade. That means risking $10 to $20 per trade if your account is $1,000. Sound boring? Good. Boring is survivable. Because this is about staying in the game. Why most blow up early? Blowing up isn't always because of bad analysis. It's usually one of these. You revenge traded after a loss. You sized up after a win and got cocky. You over-leveraged to make it all back. You didn't use a stop loss. Or worse, you moved it. Sound familiar? That's why most beginners don't make it 6 months. They're not bad at trading. They're bad at self-control. You're not a machine. Let's talk emotions for a moment, because they will betray you. The market will show you a perfect setup right after you've taken 3 losses in a row. And in that moment, you won't trade the chart, you'll trade your feelings. This one has to work. I'll double the position to recover. If I don't trade now, I'll miss the move. And just like that, you're no longer managing risk, you're chasing hope. But hope is not a strategy. Discipline is. And discipline is learned through repetition, reflection, and restraint. Your job is risk manager first. Before you're a trader, you're a risk manager. Every day you show up not to predict the market, but to control how much it can take from you. Ask any professional. They don't win every trade. They don't even win most trades sometimes, but they control losses. They keep themselves alive. And if you survive long enough, eventually you'll start to thrive. But right now, your number one job is to not blow up. Let that sink in. Build the habit of thinking in risk units. This will change everything. Don't think in dollars. Think in R units, how much you risk per trade. If your stop loss is $20 and you make $40, that's a +2R trade. This helps you detach from the money, and when you detach, your emotions don't run the show. So instead of saying, I lost $100 today, say, I took a -5R day. It's within my limit. This is how pros think. This is how you stay objective, even when it hurts. So final word for today. Here's the takeaway. Your first year isn't about hitting home runs. It's about not striking out. Small risk, steady hands, clear mind. So say it again. My goal is to survive, not impress. That mindset alone, it could be the reason you're still trading 1 year from now, when most aren't. In the next section, we'll explore your relationship with losses and how to turn them into the most powerful feedback tool in your trading journey. Let's keep going. Chapter 3. Losses aren't the problem. Your reaction is. Let's talk about the one thing you've been told to avoid: losses. In trading communities, losses are treated like failures, like proof that you did something wrong, like something to be ashamed of. But that's a lie. Losses are not failures, they're feedback. In fact, if you can't lose well, you'll never win well. That's the paradox. You want to know the difference between someone who survives their first 12 months and someone who quits in month 3? It's not who loses less, it's who handles their losses with maturity. Let's explore this deeply because your entire mindset is on the line. The emotional shock of losing. Your first few real losses will hit hard. They won't just hurt your wallet, they'll hurt your identity. You'll sit there staring at your screen thinking, I studied for hours, why didn't it work? Am I just not cut out for this? How can I ever trust my strategy again? And this is where it begins, the spiral. You start adjusting your edge too early. You second-guess every entry. You either freeze and stop taking trades, or you panic and overtrade just to feel in control again. That's the trap. And the only way out, redefine what a loss means. What a loss actually is. Let's get technical for a second. A loss is a cost of doing business. That's it. If you ran a restaurant, would you panic every time you had to buy ingredients? No, it's part of the process. Trading is no different. You are not here to be right 100% of the time. You are here to manage probabilities. Even the best traders in the world lose, often. But they don't take it personally. They don't change their entire system after one losing trade. They understand that losses are part of the curve. You need to get to that level. Stop saying, I lost money. Say this instead, I paid for data. Because that's what a loss gives you, information. Every stop-loss hit is a lesson, a chance to ask, did I follow my plan? Was the setup valid? Did I get shaken out emotionally? Was the market environment unfavorable? If you treat every loss like a teacher, you stop fearing them. And once the fear fades, clarity enters. The real danger isn't losing, it's revenge. This is the most destructive pattern in your first year. You lose a trade, feel the sting, and without thinking, you take another one. But this time, you're not trading a setup, you're trading your ego. I have to get it back. I'll just increase the lot size and fix it. I need to be green today. And just like that, you've entered the revenge loop. This is how small losses turn into full account meltdowns. And it all starts with refusing to accept the original loss. So here's your job. Don't make your worst day worse. If you lose, step away. Analyze. Recover. There is no glory in trying to win it back instantly. There is wisdom in waiting for the next clean setup. Loss logs. Your secret weapon. You probably log your wins, but do you log your losses? If not, start now, because your real growth lives in those red trades. Here's a simple way to track them. What was the setup? What was your entry and stop? Did you follow your rules? What emotion did you feel during the trade? What would you do differently next time? Reviewing this log weekly will accelerate your learning tenfold, because over time, you'll start to see patterns, not in price, in yourself. Detach from needing to be right. This is a big one. Most new traders feel humiliated by losses because they believe each red trade is a reflection of their intelligence. But trading isn't about being smart. It's about being adaptive. You will lose a lot. But the more you accept that, the more power you gain. You don't need to be right. You need to be consistent. So let go of the need to predict every move. Start focusing on process. Say this every time you lose. Whenever you get stopped out, repeat this to yourself. This loss was expected. It's part of my system. My edge plays out over time. This is the mantra of survivors. Traders who live to see year 2 are the ones who normalize losing. They don't fight it, they plan for it. They grow through it. You can be that trader. Final thoughts for today. You're not here to avoid losses. You're here to control them. You're not weak because you took a red trade. You're strong because you stayed calm through it. So say it out loud. Losses are data, not a definition of me. Burn that into your brain. In the next section, we'll talk about overtrading, how your desire to do more is often what ruins everything. Let's keep moving forward. Chapter 4. Overtrading, the silent killer of progress. You wake up early. You feel sharp, motivated. You scan the charts. You see potential. You take a trade. It doesn't work. So you take another, and another, and another, until suddenly you've taken 14 trades before lunch. Your P&L is bleeding, and your brain completely fried. That's overtrading, and it's one of the fastest ways to destroy not just your capital, but your confidence. Let's dive deep, because in your first 12 months, mastering this single behavior could be the difference between burnout and breakthrough. What is overtrading really? Overtrading isn't just about the number of trades, it's about why you're taking them. Are you acting from strategy or emotion? You see, sometimes overtrading disguises itself. It looks like, I just want to catch one more move. The market's so active, I should be too. I can't end the day red, I'll just take one more quick scalp. But it's never about opportunity, it's about urgency. And urgency in trading is almost always emotional. Here's a truth bomb. You don't need more trades, you need better ones. Why you overtrade? Let's get real. Overtrading usually comes from one of these: revenge, trying to make back losses fast; greed, trying to squeeze more out of a green day; boredom, trading because the market's open or you've got time to kill; FOMO, seeing movement and feeling like you're missing out; lack of a plan, you don't have clear rules, so you make it up as you go. Sound familiar? That's not you being dumb. That's you being human, but we need to fix it. Because overtrading doesn't just cost money, it costs mental clarity. And in this game, that's priceless. How overtrading destroys you. Let's break it down. Decision fatigue. Every trade you take drains a little bit of your brain power. After 3 or 4 trades, your ability to think clearly drops. You stop following your plan. You start improvising. That's dangerous. Loss of objectivity. You become emotionally attached to the outcome. You need this trade to win. You start seeing setups that aren't really there. Compounding mistakes. You lose once, then again, and now you're not just overtrading, you're tilting. That's when big damage happens fast. Confidence damage. When you look back and realize you overtraded, you feel like a failure. That self-blame, it lingers into tomorrow. And that's how one bad day becomes a bad week. How to know you're overtrading. Ask yourself these questions during your session. Is this trade part of my written plan? Did I take this because it matched my edge or because I felt like doing something? Am I getting tired, frustrated, or agitated? Have I taken more than 3 to 5 trades today already? If you feel even a hint of emotion in your reasoning, pause. The best traders are not the most active, they're the most selective. The power of one and done. Here's something most beginners can't wrap their head around. One good trade a day is enough. Seriously. One clean setup, one planned entry, one controlled risk. and then walk away. Do you know how powerful that is? It builds patience, precision, emotional strength, long-term consistency. Try this. Set a daily trade limit. Define a daily stop-loss cap at 2R or a fixed dollar amount. Create a walk-away rule after 2 losses. This creates guardrails because discipline fades when your screen is lighting up and your ego's involved. Journal your urges. One underrated tactic: journal your overtrading impulses. Literally, write down, "I want to take this trade even though it's not part of my plan because I feel frustrated." That moment of awareness can break the emotional trance. You don't need to suppress your feelings. You need to understand them. And the more you do, the less they control you. But what if I miss a big move? Let it go. You will miss moves. Everyone does. The market is infinite. Opportunities are endless. Your emotional capital is not. Protect it. Because if you burn yourself out today, you might not have the confidence to trade tomorrow, even when the setup is perfect. Let the market come to you. The move you missed today, there'll be another one next week. Final thoughts for today. You don't need to trade more. You need to trade better. Your goal is not to prove anything, not to catch every move, not to squeeze out every last cent. Your goal is to survive. Say this out loud with me. I only trade when my edge is present, not when my emotions are loud. That's the mindset of a trader that lasts. In the next section, we'll break down the strategy hopping trap and how constantly switching systems can sabotage everything you're trying to build. Let's keep going. Chapter 5. The Strategy Hopping Trap. Why you're stuck in a loop. Let me guess. You started with one strategy, watched some videos, took some notes. You thought, this is it. This one makes sense. Then you tried it, and it lost. Maybe once, maybe twice, maybe it just didn't work fast enough. So what did you do? You searched for another one, another video, another guru, another indicator, another setup. And now, here you are, 3 months in, 5 strategies deep, more confused than ever. Welcome to the loop. The newbie pattern. Learn, test, lose, abandon. This is the classic beginner cycle. You learn a strategy, you test it for a few days, you hit a losing streak, you assume it's broken, you go hunting for a better one. Rinse, repeat, burnout. This is the strategy hopping trap, and it's a silent killer of consistency. You think you're making progress because you're studying all the time, but you're not building depth, you're just accumulating noise. You don't need more strategies, you need more repetitions. The illusion of the perfect strategy. Here's what no one tells you on YouTube. Every strategy loses. Even the best ones, even with perfect entries, even with strict rules. There is no system that avoids drawdown. There is no setup that always works. What separates winning traders from everyone else? They don't flinch when the losses come. They expect them. They've backtested enough to know the edge plays out over time, not over 5 trades. Depth over breadth. Let me say this clearly. A 60% win rate with a setup you've studied for 6 months will outperform a 90% win rate on a strategy you just found last night. Why? Because it's not about the win rate. It's about how well you execute the edge. Do you understand the nuances? Do you know how it performs in trending versus choppy markets? Do you know the best time of day for entries? Do you know when to step back and not force it? Those answers only come with depth, and depth takes time, focus, patience, repetition. But what if it's not working? Yes, sometimes a strategy truly isn't a good fit. But how do you know? Ask yourself, have I tested this for at least 50+ trades? Did I follow the rules exactly? Did I track my trades in a journal? Was I emotionally stable when I executed? Did I review the results objectively or just based on feelings? If the answer to those is no, you don't need a new strategy. You need to trade your current one better. The danger of mixing systems. Another trap? Combining multiple strategies at once without mastering any of them. Today, it's breakout scalps. Tomorrow, it's mean reversion. Then you're trying price action entries with MACD confirmations and RSI exits. What you've built isn't a strategy. It's a Frankenstein. It's not consistent, so your results won't be either. Pick one. Commit. Study it. Trade it. Reflect on it. Stick with it through losses. That's how you master it. How long should you stick with a strategy? Minimum 3 months, or 50 to 100 trades, whichever comes first. Why? Because that's the sample size you need to see how it performs. A 5-trade losing streak doesn't mean your strategy is broken. It means you're in a drawdown, and that's normal. Remember, even casinos lose money some nights, but they keep playing the same game because the odds are in their favor and they know the long-term edge is real. You need to think like that. The discipline of boring consistency. Here's a truth you won't hear from hype traders. Consistency is boring. It's the same setup, the same checklist, the same risk rules, the same trade log. And that's what makes it powerful. Because in that repetition, you stop relying on emotion, you start building skill. And skill compounds. Final thoughts for today. Stop looking for the perfect system. Start becoming the perfect executor. Say this with me. My edge is not the strategy. My edge is how well I follow it. That's the mindset that ends strategy hopping for good. In the next section, we'll shift into something deeper. Your trading identity. Who are you as a trader? Scalper? Swinger? Trend follower? We'll define it, so you can stop chasing someone else's path and finally walk your own. Let's keep going. Chapter 6. Finding your trading identity. Stop copying, start becoming. Let's pause for a second and reflect. Right now, you might be following someone's signals, or maybe you've copied a strategy from a popular YouTube channel. You're watching them post wins every day, wondering why it's not working for you. You're doing everything right, but nothing feels stable. Nothing feels like yours. That's the problem. You're trading like someone else, not like yourself. And until you find your trading identity, you will always feel like an imposter in your own journal. Let's fix that. Why identity matters in trading. In every other profession, you tailor your work to your strengths. A basketball player doesn't try to be a golfer. A chef doesn't try to be a DJ. But in trading, everyone tries to become everyone else. Scalpers follow swing traders. Swing traders try to scalp. Trend followers chase reversals. Reversal traders chase breakouts. No wonder it feels chaotic, because you're not aligned. Your trading style must match your personality, lifestyle, and psychology. Not your favorite influencer, not your mentor, not your buddy who made $1,400 yesterday. You. Ask yourself these questions. Start with brutal honesty. Grab a notebook. Write this down. How much time can I realistically spend on trading each day? 30 minutes? 2 hours? all day? Am I patient or impulsive by nature? Do I prefer fast feedback, like scalping, or slower, more thoughtful setups, like swing trading? How well do I handle stress and rapid decisions? Do I enjoy sitting at a screen, or would I rather check a few times a day? What kind of trader would I be proud to become, even if it takes years? These answers will tell you who you really are, not who you're pretending to be. The common trading archetypes. Let's break this down into a few broad categories. Scalper. Fast-paced, high-frequency, in and out in minutes. Requires fast decision-making, low latency, and incredible focus. Not for the faint of heart. Intraday or day trader. Trades over hours, but finishes positions by market close. Needs attention to patterns, news, and strong routine. It's good if you can commit a few hours a day. Swing trader. Holds for days or weeks. Trades less often, focuses more on broader patterns, setups, and risk-reward. It's good for people with jobs or part-time schedules. Position trader or investor. Holds for weeks to months. Not active, more like guided investing with technical filters. Great for those who prefer to wait than to watch. Which one are you leaning toward? If you're not sure yet, that's okay, but you need to pick one path to explore deeply before bouncing between all of them. Your lifestyle dictates your style. You can't be a scalper if you've got meetings all day. You can't swing trade if checking the charts every 10 minutes stresses you out. You're not failing because your strategy doesn't work. You're struggling because it's not built for you. Once your trading style fits your lifestyle, everything changes. You stop forcing trades, you stop checking every alert, you stop feeling like you're running a race you didn't sign up for. Stop copying and start building your own identity, one trade at a time. Even if it's small, even if it's slow, even if no one else is watching. Because confidence doesn't come from results, it comes from alignment. Your identity will evolve. And one more thing. Who you are now might not be who you become later. That's okay. You might start as a scalper and find peace in swing trading. You might try intraday trading and shift into long-term investing. This is not a contract. It's a discovery process. But here's the key. You must commit to something long enough to actually learn from it. Jumping styles every week because nothing's working will always leave you in the shallow end. Final thoughts for today. You're not just learning to trade. You're learning who you are as a trader. That takes time. That takes awareness. And it takes the courage to stop chasing someone else's dream and start building your own. Say this with me. My style is valid. My pace is mine. My path is enough. In the next section, we're going to hit one of the most neglected parts of trading success, the power of journaling. Not just what you traded, but why you felt what you felt. That's where real growth begins. Let's continue. Conclusion. You made it. Maybe you stumbled through the first few months. Maybe you blew up an account or two. Maybe you cried. Maybe you screamed at your screen in the middle of the night, but you're still here. And that means something. It means you chose not to quit when quitting would have been the easiest, most logical path. It means you stared directly into uncertainty, into fear, into your own reflection, and you kept going. Because trading is never just about the charts. It's about who you become while facing the chart. It's about learning how to stay calm when your emotions want to erupt. It's about respecting the process when the results feel like betrayal. It's about discipline when no one's watching and patience when it hurts. You've now walked through 15 chapters of emotional truths, stories, struggles, mindsets, and mental resets. You've seen how fear can twist perception, how greed can lead to ruin, how revenge trading, overconfidence, and unrealistic expectations can sneak in, whisper in your ear, and blow up everything you've worked for. But you also know this: consistency isn't about predicting the market. It's about managing yourself within the market. You've built emotional muscles. You've started recognizing the inner critic. You've learned when to step back, when to breathe, when to say enough for today. That's powerful. Does this mean the rest of your trading career will be smooth? No, but it means you now have a foundation strong enough to weather the next storms. You know how to survive uncertainty without losing your mind, protect your capital when emotions flare up, view setbacks as feedback, not failure, think long-term when your ego wants quick wins, and most of all, you've learned that you are the edge, not the system, not the strategy, not some magic candle pattern. You are the constant variable in every trade. And now you know how to train the one thing that matters most: your mind. So as you close this book, ask yourself one final question. Am I ready to treat this like a business, not a hobby? Because hobbies are emotional, businesses are strategic. Hobbies chase highs, businesses protect capital. Hobbies die in 12 months, businesses survive and thrive. If you've made it this far, I invite you to reflect, comment, and share your journey. Every trader's path is different, but our struggles, they're universal. Subscribe to this channel for more grounded, honest guidance on trading psychology. And if this helped you, drop a comment. Let others know they're not alone in the chaos. Here's to your survival, your growth, and your real transformation as a trader. You've made it through the first 12 months. Now, the real journey begins.